Broadcom just delivered another blockbuster quarter, and its Q3 results beat expectations, which is powered by artificial intelligence demand and VMware growth. The company's revenue jumped almost 22%, and its margin expanded. And they even secured a surprising $10 billion AI order deal, possibly from OpenAI. So in this video, I will break down Broadcom's Q3 numbers, its Q4 outlook, and why this stock is still a long-term winner. Let's start with the numbers first. Its Q3 revenues grew 22% year over year to $15.95 billion. And for this growth, semiconductors were the main driver, which is up 26% to $9.17 billion. Inside that semiconductor growth, the AI revenues exploded, growing 63% to $5.2 billion, thanks to higher XPU sales. However, not every segment was strong. Non-AI semiconductor sales stayed almost flat. Enterprise networking and server storage were down, but broadband solutions were up, and VMware software business jumped almost 17% year over year. And here is the most interesting thing. Its EBITDA grew almost 30%, and margin improved from 62.9% to 67%, beating guidance. But what is really exciting is the Q4 outlook. For Q4 guidance, Broadcom expects AI revenues to grow to $6.2 billion. That's a 66% year over year growth. And non-AI semiconductors are projected at $4.6 billion. And when you add in VMware, total sales should reach $17.4 billion, which is up 24% year over year. Also, its margins are expected to stay strong at almost 67%. And remember that surprise announcement. A major customer placed a $10 billion order for Broadcom's AI XPUs. And this deal is not about just Q4. This deal is going to boost Broadcom's confidence for fiscal year 2026 and beyond. So why AI is the big driver? This $10 billion order shows how serious hyperscalers are about AI. Broadcom has already guided for 50% to 60% growth in AI revenue. But with this $10 billion deal, growth could accelerate even more in 2026 and beyond. AI racks, accelerators, and data center spendings are not slowing down, even with macroeconomic uncertainty. Most of the companies in AI space know that AI is the future, and they are investing big today. And Broadcom is right in the middle of this supercycle. So how about stock performance and its valuation? Broadcom stock has already rewarded investors. In the last 1 year, shares are up almost 120%, far outperforming the S&P 500's 20% gain. Analysts are now raising their long-term estimates. Also, its EBITDA growth is projected to rise over 25% through 2027. And free cash flow growth is also being revised upward. That means more share buybacks and stronger long-term returns for patient investors. Based on this forward-looking guidance, it is expected that fair value target for Broadcom stock moves higher. So to sum it up, Broadcom just delivered a great quarter. AI and VMware are driving growth, margins are expanding, and the outlook keeps getting better. Yes, the non-AI semiconductor business is flat, but the company has two massive growth engines, AI and VMware. With a clear runway for AI adoption and VMware scaling, I believe Broadcom is positioned as a long-term winner. So for me, this stock remains a strong buy. That's all for today's video. If you found this content helpful, don't forget to like this video and subscribe to the channel. This video is made for informational purposes only.